Welcome to the Travelex Business Weekly Outlook for December 12th. The dollar started the week with a rally. We did see the U.S. currency rise to its highest level in more than 2 weeks overall. It even touched its highest level in more than 2 months against the single currency. This is as investors came back from the weekend and they did react to Europe's latest attempt to stem the debt crisis. Unfortunately, that attempt to kind of rein in or tighten fiscal discipline across many European Union nations was seen more as a long-term fix to the debt crisis and really didn't provide much meaningful immediate relief to the single currency. As a result, we have seen financial markets sell off, and when that happens, they tend to look for a haven currency such as the greenback. Meanwhile, we've had different credit rating agencies such as Fitch. They have warned that many European nations are still at risk of facing downgrades since Europe's latest attempt to stem the debt crisis was not seen as the comprehensive solution that many investors had hoped for. So as a result, the euro does face a daunting near-term outlook, but that could be braked in the coming week. We'll talk more about that in a minute. But all eyes last week, they were on the single currency as officials met in Brussels to try and piece together a fix to the long-running debt crisis. Basically what they did was try and come up with a treaty to get economies over there in Europe to tighten fiscal discipline with the hope of adding to a more unified region to help, which was seen as a long-term fix to the crisis. A day ahead of those talks late last Friday, we did see that the ECB did cut interest rates. They did cut rates to a record low level of 1% once again. So again, that does play up concerns that the region over there is headed for another economic downturn. So that is something that is casting a dark cloud on the continent over there in Europe. And then by contrast, we had some encouraging U.S. numbers. We saw that U.S. consumer sentiment, that actually hit a 6-month high for the month of December. Even we saw that weekly jobless claims, they were on the mend as well. They fell to their lowest level in 9 months. So again, data like that, upbeat data that can take pressure off the Fed, which coincidentally does meet in the coming week, take pressure off them to ease monetary policy. But all eyes, once again, they should remain fixed on Europe as the market continues to really weigh in on Europe's latest attempt to stem the debt crisis. And then sharing the market spotlight with Europe will be the Fed. They do assemble on Tuesday for their final meeting of the year. Officials at the Fed are not likely to touch monetary policy this time around, but given the continued weakness that we've seen in the job market overall, as well as the slow recovery in housing, Fed officials could signal a willingness to do more in subsequent meetings. So that is something that could possibly limit the dollar's upside. But that's going to do it. Have a look online for the latest on the U.S. currency.